Welcome to the Banana Republic.
Oh, yeah, I love being in the Banana Republic. I love it.
Right. I feel good with bananas on my head.
Yeah, no, it's very attractive.
So, there's a headline out that from Wall Street Journal that household incomes are up 21.1% in March. And they credit our lovely government, the benevolent Joe Biden, for sending us all this money.
Right. So 35% of the income going to Americans now, on average, comes from the U.S. government. So this is direct transfer payments from Jerome Powell, who prints it, and then it's channeled through government agencies. And people don't apply for jobs anymore. You know, there's signs everywhere. We'll give you $500 just to come in and fill out an application for a job. But people are saying, look, why should I bother? I want to live like Ken Griffith over there at Citadel hedge fund. They just get billions and trillions of money thrown at them. Why shouldn't everyone live like hedge fund managers? The only difference now, of course, is that the hedge fund guys still get taxed at 15%. And the poor schlubs who are getting all these transfer payments to avoid having to get jobs are still taxed at the old rates of 30, 40, 45%, et cetera.
Right. And household income surged by a record 21.1% in March as stimulus checks hit bank accounts and propelled consumer spending. And then Zero Hedge had the article, a record 34% of all household income in the U.S. now comes from the government. And they said this is Banana Republic level stuff. So in honor of that, of course, we have the bananas. Of course, bananas are, kind of like an emblem of America, because that's where our imperialism started through Latin America, i.e. the name Banana Republics came from U.S. installed military coups in the name of Chiquita and other U.S., multinational agricultural companies. And you know what else? It's really kind of just all sugar, right? It's fructose, but it's still sugar. It's all sugar. You get fat eating this. And it's also an absence of diversity because, of course, bananas are, on the verge of extinction because we favor just this one sort. There used to be dozens and dozens, perhaps hundreds of different sorts of bananas that we decided to destroy in order to make room for these bananas. Right,
the monoculture. The monoculture as it affects agriculture. So you have palm oil decimating Brazil rainforest. You've got this one strain of banana, of course, is favored, and it's part of the Banana Republic. I think Chiquita was first called U.S. Fruit Company. They had to change their name to Chiquita because for rebranding, because it got associated with dictators and throwing people out of airplanes and the CIA.
Death squads,
Death squads.
It's a bad brand.
Yeah, and sugar, of course, is the basis of globalization, going back to Christopher Columbus, the triangular trade, sugar, slavery, and rum. So I believe that was the triangular trade, centered around England, of course. But sugar is the great killer. Obesity, the COVID victims 80% of them are all obese. That comes directly from high fructose corn syrup, which is just 60% of the American diet, the standard American diet or SAD diet is high fructose corn syrup, creates obesity. COVID came through, wiped all those people out, and absolutely bananification of the economy in the form of free fiat printed confetti. If you want to escape the confetti nightmare, go over to Swan Bitcoin right now and sign up. Register at swanbitcoin.com/orange pill. You'll get you $10 free of Bitcoin if you register. Come on, Divine. No, who's this? Swanee. Swanee.
Swanee is the star of an upcoming feature film with Divine.
Yeah. We're doing rehearsals right now. It's the Seventh Seal, starring Swanee and Divine. They're going to be, they're deep in rehearsals all week to do a very interesting theatrical production between Divine and Swanee. Seventh Seal coming up. Who doesn't like good Swedish melodrama?
How about call it the Seventh Sat?
The Seventh Sat. Available at swanbitcoin.com/orange pill. Get your $10 free. Can I eat your bananas?
Yeah. Well, actually, like I'm thinking that when we go to Miami, Bitcoin 2021, I might wear this.
Yeah.
Not this exact one, because this will probably have sold as an NFT by then and be rotten and thrown in the garbage somewhere else.
Maybe put some gaffer tape and stick it to a wall and go to Basel.
That's what I'm thinking, is like when we're on Bitcoin 2021, I could first use it as costume design when I go on stage. And then afterward, I could sell it as an NFT, or at least like a bunch of them, like sell, I guess there's about 9 or 10 in here. And why not? Put in your offers, put in your bids in the comments below. So, speaking of Hollywood, though, I have an analogy, or is it a metaphor? What do you call it? Like, I think it's an analogy. So, you know how in Hollywood, they offer back-end deals to get you to work for cheap. Now, most of the time, there is no back end, right? Because you're on net points. You get net points, most ordinary schmoes. Jack Nicholson, Tom Cruise, Bruce Willis in The Sixth Sense, Sixth Sense. They got gross points. So that's very lucrative. Like, they took a bit of a cut on their upfront pay, massive back end pay, but nobody gets back end. So it made me think of what Joe Biden's doing with these alleged tax increases, right? Because the headline reads, Biden's soak the rich giveaways could overheat an economy that's already booming and send inflation soaring. Biden says the $6 trillion spending can boost economy without negative effects. But economists, both liberal and conservative, are warning it is a gamble that could ignite inflation, the measure of cost of goods like groceries and gas. Many argue the already surging economy is now expected to expand so fast that so much stimulus could send inflation spiraling out of control. Now, that he mentions that, like, he's increasing the capital gains tax. It'll be 43 point something percent on the top, including the Obamacare surcharge. And on top of that, that he's closing the carried interest loophole that private equity uses. Well, the CBO looked at the plan, and what the plan is expected to raise over 10 years, closing allegedly this carried interest loophole, is $15 billion. Like Dr. Evil level stuff, right? $15 billion over 10 years from private equity. I mean, the likes of Steven Schwartzman makes that much a year. That's his salary practically. So, the thing is, why I'm looking at those net points versus gross points is in how the tax is applied is, Jeff Bezos is on gross points. Everybody, like all those people who earn, say, 500,000 to 75 million, those people are on net points, right? They're going to get hit with the tax. That upper middle class, right? They're going to get hit with the full tax burden. The multi-billionaires, the people donating, like Joe Biden received a huge amount of money from private equity. Do you think he's actually going to penalize them for real? No, it's going to be presented as him being like progressive, very liberal, and like burn the rich. But in fact, they've already actually created a new loophole. So as Max always says, I'm going to take this banana off my head.
Yeah. So this idea of soaking the rich is wrong, right? For a number of reasons. So first of all, okay, the carried interest loophole you mentioned, I mentioned that at the top in terms of hedge funds, right? So hedge funds pay 15% through this carried interest loophole. He says he's going to address that. We'll see if that comes to pass, whether it's phased in over multiple years, if it even gets through. Second of all, the idea that the higher income tax brackets are going to soak the rich is fallacious for a couple of reasons. Number one, as we've said before, it's not your nominal tax rate, it's your reported tax rate. It's your adjusted tax rate, excuse me. And it's on not all of your income, but only on your reported income, right? So that's the thing about being in the top 0.1% is that you don't report all of your income. Most of it's not reported. Just call up KPMG or Ernst & Young or the other two major accounting firms, and they can walk you through that. And the other thing is it's the adjusted rate of return. So after you get through it, like General Electric has a 70,000 page tax return a couple of years ago, and at their tax liability was zero, right? So their adjusted tax rate was zero. So there's no way that any law can come in that's going to put a dent into the top bracket. That's just been the story for decades. Having worked on Wall Street for many years, I can tell you that you give me the tax law and I'll give you the loophole, and you're never going to pay anything above 15% ever. Now, what it will do, though, is all the money printing will create inflation. So anybody who's got a meaningful percentage of their budget on a monthly basis that goes to food and energy, their lifestyle, their standard of living is going to get whacked. So, in fact, Biden will exacerbate the wealth and income gap. This will impoverish the poor. They'll be even more impoverished. It'll create a lot of fees for lawyers and accountants to dodge all these rules. So there'll be another billionaire class. More billionaires will be created. So it just shows you a fundamental misunderstanding of how these things work. Obviously, the only way to address the fundamental issues being discussed is you need to replace fiat money with Bitcoin. And since no one's going to do that willfully, Bitcoin is doing it against everyone's will, right? Bitcoin's got an insatiable appetite for energy. It's gobbling up silver. It'll be bigger than silver soon. It's gobbling up gold. It'll be bigger than gold. And gobbling up fiat money, the bond market, the property market. Nothing can stop it. It's on a vector that's sucking all the energy of planet Earth. And that's the rocket ship to be on. Everybody else is going to be disintermediated by Bitcoin, and you should buy Bitcoin. Awesome.
Well, I want to say that I just think that we are in a neo-feudal system, and I think Hollywood is a good way it is neo-feudalism, right? It's still a feudal structure, and you have gatekeepers all over the place, and those gatekeepers, Joe Biden is one of the most lobbyist of lobbied sort of politicians over his 50 years in office. And, I just think it's obvious, like if they're saying that they're only going to give $15 billion over 10 years, it's kind of laughable, right? I mean, how much did he send out? He just sent out 1.9 trillion in the past 2 weeks. So, and another 4 trillion is on the way. So I just think, 15 billion over 10 years is kind of a joke. And the problem, however, according to Squawk Box at CNBC, with the problem with the Fed's massive intrusion into credit markets is that price discovery really has become obscured, says Judy Schell. In a free market economy, you use price signals to indicate the optimal use of investment capital. You really risk the misallocation of capital. So, she was obviously nominated by Trump to, be on the Fed board, but the Democrats voted her down. She's a gold bug. But obviously, I mean, we're at the end of, we've lost all of the price signals. The very last of the price signals are gone. This has been a process that has happened over the past 21 years of getting rid of these price signals that might contradict what the Fed speak is. So we've gotten rid of those. And now we're left with nothing. And the misallocation of capital has, as you've seen, like we just mentioned, private equity. The private equity companies have hollowed out the economy, which in a properly functioning economy and political system, you wouldn't have the incentive. They incentivized the hollowing out of the economy because there were no price signals to tell you that your economy is being destroyed.
Right. The bond vigilantes were euthanized. The gold vigilantes were euthanized. M1, M2 numbers. M3 was euthanized, reporting on money supply. Then M2 has been also euthanized. I'm sure M1 will soon be euthanized as well. Any indication or signal or information indicating that the Fed policies are failing, it simply is memory hold. And mainstream media keeps repeating the lies. And there's no alternative media. There's no competing media. It's all basically one media organization tied to one mega bank. And I've said it before. I think it's funny because the U.S. is becoming like the Soviet Union. So, and the Soviet Union is becoming, now Russia is becoming more like the U.S. So I think of Putin, for example, as like Eisenhower, and America is like Biden's like Khrushchev. And these two like switch places essentially, and they're two ships crossing in the night. So the U.S. is going inextricably toward a collapse, a Soviet-style collapse. And meanwhile, other countries around the world are saying, we've been there, done that. We don't need to relive it, but have at it. And nothing's going to stop it.
It's going backwards in a way, just like how, you start out wearing diapers and you end up like, Biden and 80, 90 years old wearing diapers again. We're going backwards like that. Like, so Biden's kind of like Yeltsin, who was after the smoocha, after the collapse of the institutions there, then you had democracy, which was like the cover story for all those Jeffrey Sachs sort of economists who went in there and pillaged the economy and installed all the oligarchs. So we're at that stage where we have all the oligarchs. We have a guy running, Yeltsin, if for those who are too young, and most of you probably are, to remember the stories of him going around with basically Clinton people, their marketing team pushing him as the candidate to lead the new Russia out of the Soviet era. And he was like totally drunk, riding around on a tank, promising everybody rubles across the country, like giving them free money. Of course, the ruble subsequently collapsed, I think the following year in 98. And so that's kind of where we're at now. And then we're going into more and more of a command and control economy. And you do see that evisceration, the targeting of that, where they always target in sort of any revolution or any sort of cultural revolution. They target the educated, the academia, the lawyers, the doctors, that sort of class. Because look at where they're targeting their hate, not at the oligarchs, right? It's at the people, like at the public schools, the elite public schools in America. I.e., it's not a private school. You don't have to pay $60,000 a year for your child to go there. They're targeting those elite, like Bed-Stuy, that's elite private public school. There was one in the Bay Area, and there's one in Virginia that they just got rid of the meritocracy. You had to take really tough exams to get in there.
Right. This is right out of Mao's playbook, Mao Zedong, who during the Cultural Revolution got the people to hate against the educated class, to push forward the monoculture, to return to monoculture and bananas. When you eliminate diversity in your thought, in your culture, in your society, and you go down a path of strict monoculturism and ideological dogma, you end up with mass psychosis and a total breakdown. So whether it's Mao's China or the Soviet Union or Latin American countries, once they were overthrown by the U.S., they had difficulty surviving. Now all that's coming home to roost, sadly. I mean, it's totally preventable if there was an adult conversation by people who have good communication skills, who might be in the media. But instead, we're forced to watch these cockfights with people with no cocks. What could be more boring than that?
I see Matt Taibbi is kind of like on our whole micropenis thing, because he was saying like Goldman Sachs has a penis envy or something like that.
Yeah, penis envy. Well, this is a trope about weenie waving, and men tend to think with their dicks. As I've said, you made that comment before. It's not a secret. Women tend to think with their hair, right? That's the difference between the two genders.
Is that why you have your wig on?
Yeah. I'm
getting in touch with your feminine
I'm
side?
metrosexual. This is I'm channeling Christine Lagarde if she were actually not a product of the joining of Dominic Strauss-Kahn. And some equally outrageous figure of the opposite sex who I can't come up with at the moment, but I'm sure that joke will percolate and come out next time.
The punchline is in the next
episode. The punchline is coming in the next episode.
Well, for those in the listening room listening to this, you must understand that Max has been wearing a white wig with some really cool dark glasses with white rim.
Is this for the blind people?
No, this is for people who are not watching because they're in the listening room over at Clubhouse. So what they do is they don't watch it together, but they listen to it together. And for most of this first segment here, I have been wearing a bunch of bananas on my head. So just so you know what was, it all makes sense if you understand what we were like. But I also want to say that it's now time to go to our guest who is in Austin, and it's time to head there and go further on this money printing banana republicanism.
All right, great. We're back. Great interview lined up. Let's get into it. Parker Lewis of Unchained Capital. He helps with organizing the Austin Bit Devs meetup as well. Parker Lewis, welcome.
Good to be here. It's been a few weeks. We got to hang out on the Swan Signal. Had a lot of fun doing that. Now, glad to have you guys both to myself.
So I guess before we even begin into the heart of the interview, just tell the audience what Unchained Capital is, what exactly you do, and what Bitcoin financial services you offer.
Yeah, so the way that we think about Unchained Capital is a financial services platform for long-term Bitcoin holders. The thing that really differentiates Unchained is our approach to custody. We think that more financial institutions will begin to look like Unchained, but that Unchained couldn't be built by anybody other than Bitcoiners. And that our custody solution is really what defines us, and we use that in all aspects of our services. So from the custody standpoint, people actually get to hold their own keys. And we help people achieve multi-sig, hold two keys, and we hold a third key. We refer to it as collaborative custody. We really think about it as creating a bridge between a world where somebody might not yet feel comfortable being on an island themselves on self-custody, which we certainly promote and have open source tools to help people who don't want to work with a third party. But we also help people accelerate their path off of Coinbase. And then we also have a lot of first-time Bitcoin holders at the same time that in multi-sig and that by working with a trusted partner like Unchained, that they're able to accelerate their path to the point of their first exposure to Bitcoin, doing that in a way where they hold their own keys. That form of custody where clients have two keys and we have one and they have unilateral access to their funds aligns all interests of our business. We have certain clients that will then take loans from us and use a portion of their Bitcoin and transfer it to a collateral address. And while that Bitcoin is segregated, it doesn't impact any other clients. That, if we ever take risk or if some client fails to meet a margin call, that the only client that impacts is that particular client. And that when we build a permissionless effective custody solution where our clients can even go outside of Unchained to spend, we think that is a core security principle to Bitcoin, that one of the most unique properties of Bitcoin is that it's permissionless and censorship resistant, that we never want to be in a position where we could prevent our clients from having access to their funds. And that we would then think about that as an extension of the platform. We also think differently about how we offer loans. And so when we use Bitcoin as collateral for loans, similarly, Bitcoin is held in dedicated multi-sig addresses. We have one key, our clients have a second key, and we use a third party, independent party to hold the third. Should anything ever happen to Unchained, our third party is authorized to work with a client if they pay back their loan. Now, we hope and expect that never to happen, but as Bitcoiners, we think very adversarial, both about our own Bitcoin as well as our clients. We also help people buy and sell Bitcoin. So we have an OTC desk that we're working to rapidly expand. It's currently limited in a limited number of states, approximately 15. The benefit of that is we can help clients buy a significant amount of Bitcoin, and rather than have it tied up on an exchange for 6 to 10 days, we can deposit it direct to a cold stored multi-sig vault where the clients hold keys. We are working on a pilot around lending Bitcoin. But again, when we think about that, it's how we utilize our core asset, which is custody. And so it won't go into too many details, but what I said before, which is how we think about our platform is aligning all interests around our approach to custody, is that any other service that we're offering to clients, whether it's borrowing against their Bitcoin on the execution side, or if they decide to lend their Bitcoin, it only impacts the people that choose to either take that risk, whether they take out a loan and want to pay interest and manage the volatility around collateral, or whether they potentially want to lend their Bitcoin out in the future. That people who are just using us for custody are at no point having exposure to Unchained's counterparty risk, and that if we ever want to offer them a service, then they have to physically opt in by using physical keys to sign Bitcoin transactions to enter into some other arrangement.
Right. So this is a big business. It's an emerging business, and I guess BitGo and Casa are two companies that are in similar businesses, right? That would be either your guys are in the same industry, more or less, and this is becoming more and more of an issue because you've got bigger and bigger actors who are looking for Bitcoin. We're talking about now some state actors. So when I read news like it was recently reported that the IRS is looking for help to crack hardware wallets, right? So the IRS is now in the hunt, so to speak. How comfortable are you with Bitcoin's ability to remain, quote, unconfiscatable and censorship resistant at this time?
I really think about it, at least, and I'm curious to get y'all's opinion on this too. So while you guys are interviewing me, you guys have been around for a lot longer than I have. So I'll share my perspective, but I'd love to hear yours as well. That I do think about multi-sig as being a key way, and while we're still driving standards to help make it more secure, that one of the principal benefits of multi-sig is eliminating single points of failure. I think that for those who self-custody, what many people oftentimes do is use a passphrase to not potentially have a unencrypted backup seed. And when we do research, and I think you'll find this with a number of independent parties, that one of the primary ways that people lose Bitcoin is through using passphrases. Now, that doesn't mean that everyone who does that knows how important that passphrase is, and they need to secure it like it is a private key. It can be used in a way that also secures you. But with multi-sig, we think about it as eliminating single points of failure and being highly fault tolerant. So whether it's the IRS or any other sort of natural disaster, or somebody breaks into your home, I personally operate under the assumption that while hardware devices, whether it's Cold Card or Trezor or Ledger, that if somebody physically gets their hand on a hardware device, that you should assume that key is compromised. And if it was in the context of a single key, you better get your backup, you better upload it to a device, and you better move it to a place that isn't that key. But in the context of multi-sig, if a device is compromised, I would still say the same thing. You need to get a second key, restore to a new multi-sig quorum that doesn't include that key, but you're not at risk of loss. And that you can also have geographic diversity, such that if it were the IRS or the Department of Justice or the FBI, whoever it might be, if they get a single key, that they're not going to be able to move any funds. Even if they were able to extract the private key off of a single device, they wouldn't necessarily even be able to find the addresses associated with it to know that there was actually Bitcoin there, depending on how it is you're approaching multi-sig. So I do think about multi-sig being very important to this idea of censorship resistant, because while I say nodes are more ephemeral, keys are permanent. And if you have those keys, then you can spin up a node at any place in the world and be able to transfer your Bitcoin. But if you don't, then you can't.
Yeah, I kind of think of it like multi-sig is like a irrevocable trust, in a way that you build layers between you and any government that might turn evil in the future, right? So an irrevocable trust, obviously they can't get access to that. They can't overturn contract law, right? And the same thing here is like, if you have your keys distributed in a multi-sig across the world, they have to go to other jurisdictions. It could take years. I mean, look at them trying to get Julian Assange extradited. It takes years for that to happen. And the same thing with a multi-sig wallet. So I do think I could see the safety in it.
Yeah, to follow up on what you were saying there, I think it's a really good point, is that the point for a lot of this is that we have to be cognizant of the fact, as Americans, we should be really cognizant of this, because it goes back to our founding, that governments sometimes go rogue. Governments sometimes lose the plot, and therefore it's the ultimate safety valve for freedom-loving people is that, look, I'm compliant with your laws. That's me. Okay. But I'm also, I trust, but I need to verify, right? I mean, I'm looking at you just like you're looking at me. Okay. We're looking at each other. If the social contract, if you break it so that it's irreparable and you've totally lost your way, then our relationship is over and have fun staying poor, essentially. So, it's a check on, it's the ultimate check. The American system is checks and balances. We haven't had a check and balance on our money like this before, because we're saying, we're happy to play the game. But ultimately, if you guys break the social contract, and we can look at the Constitution and make a case that you have, and enough of us believe this is so, then it's, we're parting ways, Parker.
Yeah, I think that's exactly right. Where, and I put this out the other day, where that whatever the tax plan that the Biden administration put out, and just had a laundry list of all the things that were going to be free and raising taxes. And I put out a tweet that was like, "This is a guide as to why you should buy Bitcoin and hold your own keys." And a lot of people ask, like, how does that let me avoid taxes? And I was like, it's not going to help you avoid taxes. What it's going to do is it's going to put you in maximum control at all times, and that you're always going to be in a position as to make that assessment for yourself. Was this social contract just irreparably broken? And if so, I'm in a position to do something about it, because if I don't take that measure today, it might be too late when I want to make that decision. And I also think about Bitcoin, which is also to your point, which Bitcoin allows you to physically create value at some place in the world and very costlessly get up and transfer that physical value to another part of the world and continue to go about your life. And you could say similar ideas around gold, but not practically. Like if you wanted to move the type of wealth around, it's very difficult to get on a plane with several pounds of gold. And it's not with Bitcoin. And that like I think that the right visualization truly is like somebody could create value in India, put a private key in their pocket, or secure a private key in some way, take a plane across the Atlantic and show up in America or South America or wherever they want to go. And the context of multi-sig is beautiful because you could theoretically have Bitcoin stored in multiple jurisdictions at the same time while not exposing yourself to more and more single points of failure.
Now, I mean, you speak of Biden, but Biden is also, so far, it looks like he's going to print another $6 trillion from fiscal stimulus. Lord knows what the central bank is doing in terms of monetary stimulus. So we're in like banana republic land happening right now in America. And I was also noting that over in France, there was some sort of suggestion of some sort of coup or some military intervention in the government. It seems like, there are sort of vibes of that Weimar Germany sort of weird ructions in the global monetary and system. And we saw the IMF warning about a great reset coming, or a new Bretton Woods, and the World Economic Forum were saying this. So it feels like we're on the verge of like a fourth turning, a huge happening. So what do you feel about all this money printing because I see you tweet about this a lot, and you tweet loads of really interesting stuff. So what is your overall sense of what's coming?
Yeah, I do think that one of the things that helped me get to Bitcoin was going down a deep rabbit hole separate from Bitcoin as to what actually happened in 2008. And you guys have the benefit of probably having a little bit greater context living through it at the time. I was just out of college and working at Deutsche Bank, but didn't really have the context. Was there living it, could tell that something was totally wrong, but just didn't have the maturity to be able to actually understand how crazy things have become. And I think that was really the point of no return. But I went back, this would have been early 2016, and started reading Fed transcripts. And not just the minutes that they release every 2 weeks after the meetings, but they release the full transcripts 5 years after the Fed meetings to really get in the head of the decision makers at the time that they were going through some of these drastic measures. And I came away with the conclusion. There was one meeting in particular, or there were a couple meetings in 2011 that were particularly formative for me. And they 2011 was when it was like the European debt crisis in the fall, I believe, like September. But certain of the series of meetings that I read, it was all throughout the first half. I read every single meeting, like 250 pages of their transcripts, and it was post QE1, and it went from kind of talking about economic conditions as slowly improving to then in like January to March, hey, things are kind of leveling out. We don't know what's happening, to April, kind of starting to see trouble. And this has kind of been the voice of the central bankers. And there was a key meeting in June, and they were talking about when they would unwind QE. They were in QE2. They were in the middle of QE2. And they were talking about when they would unwind QE2. And they all, in some form or fashion, were expecting that they would unwind QE2 in the beginning of 2012. So that was one piece. And I really thought about this exercise. I'm reading this. I know the end of the story, and I'm reading a book but the people that are involved don't know how it actually ends. And so you can actually evaluate with real context as to how right these people are that are making decisions around trillions of dollars. The second thing was they had a roundabout where they talked about, well, what will we do when we unwind QE2 or QE1? And to a person, almost like 15 out of 16 said that they would start taking the liquidity out of the system before they started raising short-term interest rates. And then, as we all know, they started raising short-term interest rates and then started to try to drain the liquidity. Then, literally 3 months later, there was the European debt crisis. And then in the following year, they started QE again, massively. It was the largest program to date. And my overall conclusion of my research was these people don't actually know what it is they're doing. They can't know. And that more and more QE is going to be necessary, because the only way that QE can work is to cause credit to expand, which then dictates that you actually need more dollars to support more debt. I think then if we fast forward to 2020, for a lot of people, it really was if the height of QE 1, 2, 3 was 85 billion a month for about 14 months, and it was 45 billion of treasuries and 40 billion of MBS, that when the Fed between March and June of last year printed $3 trillion, that it went from the frog being in a pot of water that's boiling to throwing everyone into a boiling pot of water. And a lot of people that wouldn't have otherwise woken up to this had to start paying attention. They couldn't avoid it. And that was, I've been increasingly having these conversations, but it was Paul Tudor Jones making, like, basically he defined it as the great monetary inflation. Like and he specifically said it's happening at a speed and pace that even caused me to shake, or something along those lines, paraphrased almost verbatim probably. And that and a lot of people say, well, we couldn't have predicted that COVID would happen. And the reality is, if it wasn't COVID, it would have been something else. It's not COVID. It's now COVID and shutting down a global economy may be asinine, and it might have accelerated things, but it was inevitable. And it was inevitable because of the degree of leverage in the financial system that merits that they need trillions and trillions of more dollars to support it. So when I see things like, anytime the government throws out the word trillion, I just buy Bitcoin on the spot, because there's really a line of thinking that most people in the traditional financial world have. They will say, it doesn't make any sense, and it's all going to end badly, but they had to do something. And that's just, there's no logic involved in that. It's that sometimes not doing anything is the right path, as we all experience in our day-to-day lives. Like, every inaction is also an action. If we're running companies, we wouldn't continue to make the same mistakes. And so I always like to tell people, if QE worked, why did they need two and three? And then why do they need the 3 trillion? And I've formed an understanding myself as to why that happens. But as soon as these people get out on the slippery slope, they don't see the immediate, in their face, manifestation of it causing economic destruction, because it happens slowly, but it's happening. And it gives them the audacity to think that they can do it forever. And so every time when I see the Treasury or the President of the United States say we're going to come out with a $2 trillion program, that is, I immediately say the only way that that gets financed is for the Fed to print trillions more of dollars. And it's not necessarily one-to-one, but it all catches up to them. And so I do think that, the consequence of it is it's accelerating that path towards like Bitcoin really is the arc. And the benefit is that it's causing people, because it's happening so fast and suddenly, that more people are wising up to it and saying, you know what, this will end badly. Whether or not I think that they have to do it, I'm a survivalist. I'm going to act in self-preservation, as all capitalists who understand risk do, and all people who love freedom do. And they say, I need something to store my value, and I'm gonna sit this one out, and I'm gonna opt out. So I think that that whether or not you hear the Fed chair talking about more QE, they're adding 110 billion a month right now, and everyone it's become normalized. And 110 billion, even if it's not the 3 trillion from last year, it's more than the height of QE3. And it's insane, and that more people are waking up to it. So whenever they say that, I just know one way or the other has to be printed.
Right. So the word trillion triggers you.
The word trillion definitely triggers me every single time I hear it.
All right. So I have it like a two-part question. So, I'm listening to you, and I'm thinking about other millennials that I follow on crypto Twitter. And that's completely different than the boomers like me. The boomers are all about shop till you drop, fake it till you make it, spend, conspicuous consumption. And the millennials and the Gen Z are like, we're frugal, we're preparing for essentially what sounds like a bit of a revolution. And so my question is this not kind of echoing what we all went and experienced through the Occupy Wall Street movement? And the second part is, how come the left is so tone deaf to this whole phenomenon? The progressives, the Jimmy Dores, Lee Camp, Anya Parampel, people I've just talked to recently, they hear what I'm saying, but they don't see the connection to their concerns, even though this is an apolitical crisis that we're facing, one of a rogue government, et cetera. What do you think?
Yeah, I do think that. Now, I wasn't part of necessarily the Occupy Wall Street movement, but I do think that there is a not necessarily a collective sense, but people who are in around my age or even younger, that whether or not they can put their finger on what exactly is broken, there's a sense that the system is broken and the economic system is broken, and then it becomes a lot of people that maybe disagree about what the solutions are. I think that younger people are generally more predisposed because they're not as wet in their ways. And so I think that whether it's, people of, and I think increasingly we're seeing people of a generation, beyond me who are starting to wise up to this, but they've also been in a boiling pot of water. Right? Like when I think about, I used to work in the traditional financial services space. And if you have been working, you guys, obviously, one of the questions I want to ask back to you is how you guys saw Bitcoin so early. You guys have been doing this since 2010, 11. I think there's a lot of people that maybe recognized that the system was broken. It was a lot of the people who appreciated gold as a monetary medium. But even those people are very slow to come on to Bitcoin, and you guys were there, and you were predisposed in some way to be able to see it. So I do want to hear your thoughts on it. I think as it relates to the question about why the liberal left isn't as quick to jump onto it, I do think that there's a natural barrier between people who look to collective solutions versus individual solutions, and that we recognize as individuals that if we add enough individuals up, that's an aggregate, but that also coming to Bitcoin is it's an individual, and it's a personal decision. It's somebody that has to look at it and say, I want to take the time to understand this. I'm not just going to dismiss it, and that we're also comfortable in that world of making our own bed and living with it. And so I think that might be at the root of, rather than us look and say that the solution to maybe all the problems is not necessarily a collective one, because that's gotten us into this mess. But that if we each make individual personal decisions better, that we'll get to a better aggregate outcome.
Well, I'll step in and say one of the things that kind of woke me to the system was in 2008, we were making a documentary film for Al Jazeera English called Brown's Bottom. And we were looking into why Gordon Brown sold half of Britain's gold at the all-time low. And in order to do that, I thought, let's juxtapose it to what the Bundesbank has done, because the Bundesbank allegedly owns, like 3,000, 4,000 tons of gold. So let's go talk to the Bundesbank about why they own their gold and they have not sold it. So we had an appointment with the Bundesbank. It was something like March 18th, 2008, which was a Monday morning after Bear Stearns collapsed that weekend, and Ben Bernanke cut interest rates 75 basis points on Sunday night. So we had a meeting with them at 8 a.m. in the morning with the head of their gold department. And we arrived, our phone was ringing off the hook and we didn't answer because we knew they were going to try to cancel it. So we showed up and the marketing department met us at the gate. But being Europeans, they're so polite, they let us in. And I was filming on my camera. And the marketing department woman was like, yes, Axel Weber himself said we cannot meet with you, especially because you're speaking to the gold department. And we were like, Max was like, oh, so are you guys nervous? He's like, yes, we do not know if the financial system will survive. Like this financial system, the whole thing. And I was like, these guys don't know what they're talking about, right? Like this, they're like, the Bundesbank is like the central bank of all central banks, the most like in charge, like together. And they had no idea whether the system would survive. And this is like, a few months before the white paper was published. And, I think that like we were already skeptical of whether or not these central bankers actually knew what they were doing. And I don't think they do. I don't think like the markets are bigger than them. They're bigger than all of us. So like why anybody thinks that they can control it is beyond me. Max had invented, a virtual specialist technology. And he was, if you look at our old episodes, Max really, really, really got it in such a profound way very early. Compared to what I did. But I already did not respect the whole financial system because we were reporting on it as it was happening live, as it was collapsing live.
Right. So I created a game in the 1995, 1996 called the Hollywood Stock Exchange. And so I invented a virtual currency, which we have a patent on that currency. And the goal was always to try to get that currency outside of the gaming environment into the real world, that you could use it, you could spend it on stuff. So I had a conversion up and running on eBay, and people who were given $1 or $2 million of these Hollywood dollars to play the game. After they played the game for a while, you could cash it out on eBay at $1 million to 1 exchange rate. So I was trying to bridge a virtual currency to real currency outside of the gaming environment. Ultimately, it didn't happen as such. So when I was introduced to Bitcoin in 2011, and it's a decentralized digital currency, and it had figured out how to exist outside of a gaming environment, I immediately was like, okay, cool, because I already know that people are going to love this because people love the digital currencies in the gaming environment. There was already Second Life had its own currency called the Linden Dollar. World of Witchcraft, of course, is a huge game. They have their equivalent to currencies and things like that. So I already knew that you could breed a whole civilization online if you had a good currency to do it with. And, we were the most actively traded exchange in the world for a while, the Hollywood Stock Exchange. We were trading billions of shares of virtual securities. And so that's how I immediately was like, yeah, this is cool. It's going to work. I already know it's going to work. And that's how we got started. So the resistance, though, because we were gold, bugs, more or less, in 2011, it's amazing that our audience really hated the idea of Bitcoin. And all the comments from our shows are very negative and like, you guys suck. I liken it to when Bob Dylan went electric. He was a folk music hero, and then suddenly he's playing an electric guitar. How dare Bob Dylan do that? So we got a lot of pushback from our audience, but nevertheless, it was clear that this was going to be the future.
And I want to follow up with that because, again, we were at the Bundesbank, and you saw that they were, like, in particular, concerned about mentioning anything about gold. Gold had hit $1,000 that morning for the first time ever. And so you see this issue of trust about the monetary system globally, and that they were like, they didn't want to speak the truth, didn't want to tell anybody that they were concerned. So I want to talk about that Fed speak notion of managing perception, whether it's through, we used to have price signals in the market, and that used to tell people the truth about what was happening. They've crushed most price signals. They crushed the price of gold. They crushed interest rates. They destroyed bond vigilantes. But the perception, the mood of the people themselves at this moment, you see that similarity between Weimar Germany. You see it after the French Revolution and the assignat. Like the French Republic had to print so many assignats because the people were like ready to behead the revolutionaries, saying, "Give us more money. Where's my money?" During in the lead up to the election with Joe Biden, when they won Georgia, there was their doors got graffiti on McConnell's door of "Where's my money?" Like the notion.
Give me the $2,000 check.
Yeah, everybody like that mood has changed. Nobody wants to work anymore because they're getting so much stimulus. Like, you can't stop it, right? Like, once you're giving people thousands and thousands of dollars a month, like, how does it stop?
Right. And I don't think that it can. And I think the thing that you key in on, I think what you learned by meeting with somebody from the Bundesbank in 2008 is what I learned by reading those transcripts. That is, so many people in traditional financial markets, they look and they say, well, the Fed wouldn't do it if we weren't, out of the woods, or that they have this, constant idea that the Fed is somehow in control. And that when you have a personal experience where it becomes very clear and vivid that they don't, change your perspective. And one of the quotes that always, it's the Jean-Claude Juncker quote, where I think this is kind of consistent with the theme. I believe it was him. I don't think it was Draghi, where he said, "When it gets serious, you have to lie."
Yes.
That quote will always stick with me. And then there's another quote, I believe it was from 2011 from Bernanke in the transcripts, where he keys in on this idea that, and I differ about his base foundation, but he says, I'm willing to accept that monetary policy isn't the solution, and that there's fiscal and structural problems that we can't solve, but we have to do something. We have to be palliative. And it was basically a communication. Now, I would argue, as I think you guys would, that it's quite the opposite, that it wasn't that, monetary policy wasn't just the solution. It's that monetary policy actually was the problem itself. But even if I kind of go beyond there, it's that even when they know that there's limitations, they still respond by printing trillions of dollars. And that's not any way that a rational economic actor behaves. The corporate boardroom, if they're allocating capital and it's not working, they're going to change their behavior. They're going to have to respond to what it is that they're doing relative to the signal. The other thing that I learned when I read the transcripts, there was a quote from one of the senior economists where he basically says that they have to accept that the Fed themselves, understanding and linkage between the financial sector and the real economy. He's like, if we have any understanding, it's not beyond infancy. Basically saying that when they print $1 trillion, they don't actually know how it's going to impact the broader economy. I think the way that and when you just accept that fact, it's like they recognize that why they pursue it, God only knows. Like, that is not the temperament of somebody that you want making $1 trillion decisions.
Right. Well, the other big reveal at the Bundesbank meeting was the PR woman said, "You know what? You can't see Weber, but we'll take you on a bit of a tour of the Bundesbank." And we said, "Okay." And I said, "Okay, well, at least can you show us the gold?" And she said, "Oh no, the gold's not here. It's in New York."
Right.
And this became big news because the German press picked up on this when this documentary was aired, and said, finally, confirmation from someone in the Bundesbank that Germany's gold is in fact held in New York. Because up until that moment, no one at that institution had ever definitively said where that gold was. And so that became a bit of a, and subsequently other countries, including Germany, started to demand their gold from New York and London, and they started repatriating their gold, which has been going on for several years too, because they don't have confidence in the central banks. In 2008, we saw the confidence between banks broke down to absolute zero. We had a credit freeze. You point out in your tweets about 2008, when there was, the mega banks were insolvent, as you tweet about in 2008. That's absolutely correct. Somehow they got the dollars to lend to the Treasury in order for the Treasury to then bail out the banks. All very complicated, but it's a function of a broken system, opt out by Bitcoin. So yes, in 2008, we had the overnight rate climbing to double digits because the banks effectively closed their lending facilities. All those theoretical value at risk models that they used to establish liquidity were phony. They're fake. There is no liquidity under any type of run, which we have to assume is more than a 1 in a 10 million event like they say it is. It's more like a 1 in 3 event. And they just printed, they went to Congress under TARP looking for just under $1 trillion. And before all was said and done, they had printed almost $20 trillion.
Yeah, so let's jump in there. I have a quick point to make on that because, that was the time when the Bank of England told their bankers to lie about LIBOR. Like you mentioned Jean-Claude Juncker saying it was he who said that we have to lie at certain times. You mentioned palliative care. A lot of people get lied to when they're about to die, right? The doctors, the family don't tell our, wife or husband that they're about to die. Palliative care is given when pretty much there's no hope. Like you're going to die, they're going to ease your way out. So it just seems like that's the big lie, right? That system's over. So Christine Lagarde is in charge of the ECB now. She said recently that we must stop Bitcoin because Bitcoin is an escape valve. It's an exit from this system. Is that exposing the fact that they understand that their system is dead? It's over.
Yeah, I do. I think it's when any time I hear someone within the U.S. dismiss Bitcoin as it's just too volatile. It's a new shiny object. It's not a currency. That we've certainly had many of those. I think Carney from the Bank of England has said that. I think that, and I've wrote about this as part of my Graduate and Suddenly series, we say that Bitcoin cannot be banned. That it becomes down to a decision tree that does Bitcoin work? Is it functional? Is it viable as money? And in my mind, it is if there's a 21 million fixed supply and that's credibly enforced. And so if it doesn't work, then there's nothing for the government to ban or for central bank to ban. If it does, then you can start to evaluate whether that is practical or possible. I think the more that you understand about Bitcoin, you know that it isn't. But when Christine Lagarde starts to say that, it's the fait accompli in my mind. It's that wait, 3 years ago, you were telling me that this was funny money and that doesn't work. And now today you're telling me that it's a threat to some sort of natural or national or supranational interest and I can't have it. And Saif Dean always talks about this where he says, if your government wants to ban something, you should probably own that people will look at that and it becomes the greatest marketing dollars that Bitcoin never has to pay for. I think it does signal to an extent that they do, yes, or they're starting to get wise. It's like $1 trillion of purchasing power is a lot of wealth. In the future, we'll just be thinking about it in Bitcoin denominated terms, but that is a massive system. In my opinion, it's a system that can't be stopped. And it's also something that regulators, whether it's a central bank or a treasury department, can't ignore. I think there's one other thing that, kind of along this line, Max, you brought up that tweet that I put out. It's really interesting. If you go back and you look at the amount of debt that existed in the US financial system in 2008, and this is really how I boiled down the scenario for myself that really brought me to Bitcoin, was at that time, there was about $53 trillion in dollar denominated debt in the US system as quantified by the Fed, which is just fixed liability, fixed maturity debt, not derivatives, not unfunded pension liabilities, just true debt as it would be commonly defined. And the banks only had $350 billion. So there was every dollar that existed had been levered over 165 times over. And that, I actually had this moment where I stopped and was like, wait, they always like lionize this meeting between Hank Paulson and the executives of the banks, like, we're going to give you this money. They all knew. I was like, wait, we are the ones who give you the money. So if you want to do that, then you first have to give us money first. And by you, we mean the Fed, and we'll, keep this rodeo going. But, I think anybody that pays any close attention to it knows that was likely the line being drawn in the sand where there was no going back. And now it's just a matter of everybody else catching up.
So, yeah, let me ask you this. So I read a little quick story in CoinDesk, and the headline was, yeah, Iran is mining Bitcoin and storing Bitcoin, but we should be wary of this because Iran doesn't share our values. Essentially is what the headline is saying. My question is this. In my view, Bitcoin sees all countries the same. And Bitcoin is on its own vector, and you get the price you deserve. And if the US wants to be late to the hash wars, the hash race, they're going to pay up. They're going to pay a higher price. But it's not really appropriate to politicize a country wanting to get into Bitcoin or Bitcoin mining, because every single country in the world today that's been living under a 50-year regime of pure fiat money with anchored to nothing has the exact same problem. If one country is smart enough to figure out that Bitcoin's the answer, let's not politicize that. Let's not bring in our bigotry. Let's just applaud them for being smart enough to get in at a lower price than some other country, presumably America, who's going to be paying $200,000, $300,000, $400,000 in Bitcoin, right?
Couldn't agree more. I think about it as that, and I would probably share this view. People oftentimes say in Bitcoin that Bitcoin is the currency for enemies. I would actually say that if you don't want people to, in Iran, whether it's the central bank or the people of Iran, to adopt Bitcoin, I believe that is the inhumane decision or position. I also think about it as, because everybody needs money. Money is what helps coordinate resources so that, not even thinking about luxuries like Lamborghinis, like money is what helps deliver basic healthcare, food, clean water. And if you're taking a position where a country, because they're at odds with your government, shouldn't be able to have its people have access to that same good or resource, I think that's insane and ultimately inhumane. The other way I would categorize it is, look, we've seen what's happened in Venezuela, right? And that's devastating. And we don't use it as a punching bag. We use it as an example so that the rest of the world doesn't make the same mistake, or that the individuals are able to get wise to protect themselves. And hopefully enough people do, so that we can, not go back to a world of barter, essentially. But when I think about Venezuela, it's a country that has more oil resources or more energy resources and natural resources virtually than any other country in the world, maybe the most. And their ability to produce energy has plummeted, and their actual output has. And as that's happened, their ability to fulfill very basic necessities, healthcare, medicine, clean water, food, has massively deteriorated. Imagine if that same thing happened while there weren't functioning currencies around it, because that's what Bitcoin represents to the entire world. Bitcoin is, like all fiat currencies are the same. The value of any good will trend towards its marginal cost to produce. And if the marginal cost to produce $1 is zero, its value is going there. The marginal cost to produce a Bitcoin is increasingly trending towards infinity, and its value will go there. And what that means to everybody in the world is they're going to have a functioning currency to get very basic necessities. And so if someone's looking at the world and saying, hey, I want the rest of the world to look like Venezuela, like, it's just not a credible or defensible or serious position in any meaningful way.
And, finally, speaking of living with dignity and having the ability to have individual sovereignty and Bitcoin, this notion of Bitcoin citadels and how we seem to be emerging towards this trend towards possibly city states, like during the whole Renaissance 1.0, and I believe we're in a Renaissance 2.0, like this emergence of Austin versus Miami that's developing in the US, which I love because it's a great competition, right? You want to draw on the best people in the country. So tell us what you're seeing in Austin, and are you concerned about all the people from Los Angeles and San Francisco moving there?
So both. I am concerned, in the sense of whenever you have a massive influx of people that are coming from places that are really fleeing for maybe different reasons, but similar reasons, that you worry about them bringing their politics and causing the same things that caused them to flee to cause your home to turn that way. But I'm also, kind of incredibly optimistic about the future, because I know that it's just a matter of time. Bitcoin changes people more than people change Bitcoin, and that knowledge distributes, and it does, if not exponentially, in an accelerating fashion. And so as more people get involved with Bitcoin, they share, create more content, and people come to learn. And then, as the next 100 million people adopt it, it just becomes easier and easier. So I find comfort in the fact that all these people here are coming at the same time that Austin is attracting a lot of Bitcoiners. I do think that I also think about it as I'm born and raised in Austin. I'm born in Austin. I'll die in Austin. That there's a couple different type of people. There's certain people that get fed up and just affect change, and then there's other people that move to somewhere else. And we want to welcome everybody to Texas and Austin, but we also recognize that this is our home and that we're not going to go the way of other places. And then when I think about, whether it's my own company, my own day-to-day living, the places that have the most Bitcoin, like literally the nominal physical amount of Bitcoin and the number of Bitcoiners, those places are just naturally going to be the most prosperous places. They're going to have the best forms of money, most of it, and they're going to attract other people to build the things that make their lives better. And the people that see this early, it's also just nice to be around people that see the world the same way. Because if you aggregate those people in the same place, then the output is going to be far greater than if they were all spread out. And so I think it's also great that there's places like Miami that are attracting a lot of Bitcoiners. I want the competition to be ruthless. Like I'm going to attract a lot of, not just me, but our group here in Austin, that once you start to have a network effect and you have an in-person meetup, people can come and be around other Bitcoiners. They want to be around people that see the world similarly, not just to get around and talk about Bitcoin all day long and about how it's going to the moon and how hyper-Bitcoinization is going to be great, but it actually impacts your day-to-day life. And so I think that we'll see more of these. I think that people are going to continue to go to places that respect civil liberties, and that are accepting of and promote Bitcoin-based businesses and Bitcoiners, because that will bring economic development to their local jurisdiction. So we're doing it here. We're seeing a lot of people come. I do think, I think as certain people might have heard on the podcast I recorded with Marty Bent from TFTC a couple of weeks ago, he's moving down to Austin, and I think about him as a bellwether. That move is going to wake people up, and I hope that the Miamis of the world and the other places, they wise up too and try to compete our Bitcoiners away. But we'll all is fair in love and war.
It's funny because, the mainstream media and the blue tick Twitter is very, very like almost authoritarian in their social justice warrior thing, where they speak, but watch what people are doing. And they're fleeing like places like Chicago. They're fleeing New York. They're fleeing New England. And where are they going? They're going to Florida. They're going to Texas. They're going to states with a more libertarian bent, with lower taxes, with a stay away from us attitude, a laissez-faire attitude. So, look what people do.
Yeah, it's provable. They just added some more Congress people to those states.
True.
So we know demographically and politically that's having an impact, and that means the political, landscape is being changed. I guess one last thing to kind of touch on here. So on the topic of memes, right? So one of the fun aspects of being 61 years old, as I am, is that I can see generations coming and they have interesting characteristics. So memes are definitely a language of a generation. And you've got, you're fluent in memes. You've got a meme, run the numbers. I think that's associated with you very much. And how important are memes to this whole movement of Bitcoin? We know the roller coaster Bitcoin guy very well. We know I just came
Yellow.
back my boating accident, the boating accident meme, right? So is it just shorthand way to communicate? Did it come out of social media? As an anthropologist looking from another generation, tell me what your perspective is on memes and how it impacts Bitcoin.
Look, I think memes are incredibly important. I will have to cite, and I recommend that everybody go back and watch it. There was a presentation that Bitstein did at, I believe it was Bitcoin or BitBlock Boom 2019, and it was titled something like geopolitical memetic warfare. And Bitstein did a better job than I could in terms of breaking down the power of memes, but ultimately communicating that we're meming money into existence. And so whether it's NGU technology, number go up, orange coin good, laser eyes to 100K. Michael Saylor was somebody that was like, if you don't get laser eyes, you don't get Bitcoin. That it's a way very efficiently to communicate a lot of information, and that in order for something to become a meme, that it really has to have a lot of truth packed into a very small amount of content. And then that goes viral. And so I do think that what's actually happening is that we're sharing fundamental truths that then resonate with people and click for people. Stack sats, stay humble, stack sats. That all those buy Bitcoin, the buy Bitcoin sign guy, like it becomes a moniker in and of itself. Like you're not literally saying buy Bitcoin, you're saying opt out at the same time. And so I do think that the meme culture, Bitcoin would have succeeded even without the meme culture. But Bitcoiners are also good at memes because they're creative people. So it also like signals that, I've never like the run the numbers, truly that wasn't me. I've just run with it. I've found the signal, and I believe Pierre Richard was the one who came up with the run the numbers. I just bought 450 t-shirts and started handing them out so that more people would learn about it. So I'm doing my part, but that was really Pierre.
That would make sense because he's an accountant.
Yeah,
he's been saying that for 30 years.
Right. Yeah.
That's all he talks about are numbers. We talk to him. The guy is all about the numbers. But also with memes, they are also similarly censorship resistant because they are hard to decipher if you don't really get into it, and they kind of come and go in an instant. So like Bitcoin itself, it's censorship resistant. So I think it's a natural ally to the Bitcoin culture.
Agree. Yeah. You send a loud signal, sends a lot of information, but if somebody was passing by in the street and didn't know, you wouldn't have any idea. If somebody walks by and just saw a run the numbers t-shirt, if they didn't have any inkling, they just walk by, they have no idea that it was about Bitcoin. No number go up technology, same way, kind of like flies under the radar, but it finds the people and sends the signal to the people that are paying attention, and it connects with people that are out there looking, but it goes unbeknownst to the rest of the world.
Also, I think, Medici happened. Medici was there in Florence, and the Florin attracted a lot of amazing people to Florence. But we remember, Da Vinci and Michelangelo and Botticelli. You can't remove them all from each other, right? You can't remove the accounting that happened during Renaissance, the double entry, a bookkeeping that was invented. Like, it seems like we have that. That's why I call it Renaissance 2.0. We have the good money. We have the triple entry bookkeeping, invention, essentially. We have the artists. Like, it makes sense because, the reason why history rhymes is because of incentives, because humans are like, we have inbuilt like that game theory plays on the innate, human characteristics of greed, of desire, of all the things that make a human good and bad. So I think it seems inevitable.
Yeah, I think it's like the recipe for both prosperity as well as despair. They are similar, and that we naturally ebb and flow and get further away from that truth, and then naturally gravitate back towards it, and that it requires the same inputs to the actual physical goods and materials might be different, but the same general kind of what you need to drive that prosperity, because it's ultimately humans cooperating and interacting, have those consistent themes. And I think that they're all clearly here with Bitcoin, and that it will draw people together.
Well, thank you so much for orange pilling our audience and us as well. Like it's an ongoing process. The rabbit hole is always another layer down.
Yeah, my trigger word is trillion.
100%. No, I really appreciate you guys having me on. It's fun. You guys really are two of my favorite people, and I look forward to hanging out with you guys in Miami.
Yeah,
Yeah,
Miami.
let's do it, Miami. You may end up staying in Miami. You'll be swayed out of Austin.
I'll give Mayor Suarez a fair shot. You know, we'll see.
Yeah, they got steaks and cowboy hats there too. You know.
No.
Hey, those are two critical inputs. If they can get a lot of Bitcoiners, if they win that battle, I'll gladly come down.
I think they're more pork. Like they have the Cubano.
Yeah, the Cubano sandwich and floral shirts. I think is big. You know.
We can ship cattle over there.
Well, you could get into alligator steaks from the Everglades. You know, get some alligator.
I do like alligator. I'll tell you that. I do like alligator. So
yeah, it makes a
we
good
don't have much
fritter.
of that here.
Yeah. Woo. That's our ode to Joe Biden. That was an amazing interview with Parker Lewis, and I think you see that, one could despair about the situation with all this free money, the Biden bucks, but in fact, I think this next generation is going to take care of us, Max.
That's what I'm, cozying up to, these millennials and these Gen Zs. I need somebody to care for me in my old age. Come visit me in the nursing home and feed me soup.
We need to build a Bitcoin nursing home.
Yes.
A citadel for old folks like me, you, Bitcoin Tina.
Yeah. We're getting on in years. We need our own assisted living facility for old Bitcoiners.
Feed us some slabs of meat, that kind of thing. So, of course, I do want to mention that this episode was brought to you by swanbitcoin.com/orange pill. You can use it from all over the world. And the sunexchange.com/orange pill, where you can go to monetize sunshine. You buy solar panels and then lease them out to the sunniest places in the world, down in South Africa in particular.
Yeah.
So that is awesome. Actually, let's play it nice because, I feel so stoned from inhaling. I accidentally inhaled one of those bananas.
You smoked a banana peel?
Yeah.
Accidentally?
Yeah, accidentally. It was a total accident. And I want to play that little ad from the Sun Exchange. It calms me down.
Sun Exchange is the world's first peer-to-peer solar leasing platform. Earn Bitcoin solar powering communities in Africa and be part of the new world economy. Visit thesunexchange.com/orange pill and start monetizing sunshine today.
And right. So, I think this is the time where we usually start heading.
I want a banana.
We start heading over to the sun.
Where's some banana? I want a banana.
This is where we usually
Plucky wants a banana.
Plucky wants a banana.
I want a banana.
If you can still bid on these before they go bad. This is a sort of art for fiat. That was that moment in Basel at the Miami event where they sold the banana. I think that was the final moment. That was like the nail in the coffin of the US dollar.
Oh yeah, Plucky's doing a striptease. Hi, I'm Plucky. I'm a striptease artist. Hey, baby, here's my banana. That's very good, Plucky. I see you've been learning some aerobic exercises here in lockdown. Yeah, I have, baby. Love it. All right, well, why don't you go back to your little cage there?
I think the banana hat looks better like this. I think it's looking good.
Yeah, it looks more animated. The monkeys open the bananas from the back. That's what we learned from the monkeys. Humans are dumb. They try to open it from the top, and it gets all mushed. And then here it says Chiquita right here. Chiquita used to be called U.S. fruit, I believe, and then they got in trouble for throwing some Latin American dictators out of airplanes that were installed by the U.S. and then threw them out of airplanes. And they changed their name to Chiquita as a branding exercise.
I think it was United Fruit.
United Fruit. And it's like Ford, they built a whole city down there in Latin America. Build
but
cars.
I don't think Ford threw people out of airplanes.
No, they threw cars out of windows.
It was just United Fruit.
They're just a fruit company, but forgot
Right. So it's now time to head over to the listening room and make sure you subscribe and hit the notifications because, we're a totally normal channel here and everything is normal. We're going to be microdosing on Wednesday as always. And then we're heading to West Virginia.
Wait a minute. These aren't keto.
Those are not keto. Max, you're going to turn into...
Am I going to grow a vagina?
Oh my God. It's definitely time to leave. Okay?
No, these are what you smoke the inside the peel. Here, these things. You got to scrape them off and dry them. Then you smoke them. And it seems silly now when you can just get microdosing mushrooms on the corner pharmaceutical store. You don't need to dry out the banana peels anymore. That's old school. That's a good banana.
So as I was saying, we're going to microdose on Wednesday, and then we're going to head up to West Virginia. We're going to visit Tim Pool in his studio up there. And so make sure you tune in. That's on next Monday. But we're going to, our next guest will be Alex Gladstein talking about the petrodollar. And of course, that's tied to this. So I might have to keep this. It might be rotten by the time we interview Alex Gladstein, but it's for the art.
No, those actually, I'm discovering after eating this that it's actually made out of plastic. It's a designer fruit. It's for decorative purposes only.
It's organic. It's organic designer fruit.
Yeah.
All right. So it isn't red, it isn't blue, but this episode is done for you.
It's all done. Bye. 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 Bye.